Now, this is an evergreen fund. I mean, you can invest in it at any time. Tell us a little bit about the liquidity getting out.
So the liquidity getting out, first of all, we have gated our fund somewhat, right? And you're familiar with this, I'm sure, that we want our investors to think about this long term. We have 5 years, right, of penalties, and there's a lockout for the first year, then 10% of the first year, and then it scales down. It might be 7.5, 5 to something of that nature. It was interesting because as we saw with Blackstone, this sort of, they were very friendly about their liquidity and their mechanisms and the ability to get out. And we saw a run for the gates. And we want our investors to think about being invested for 4 or 5 years. So if an investor wants to get out, they can. They just send us a notice. We have tender offers, I believe, every quarter that, but we also have the ability to limit, right? What we don't want is a run on the banks because, Jim, if you want to stay in your investment or I want to, but suddenly we have 40% of the people who want to get out, then we're selling assets at fire sale prices. And that impacts you and me. And when we think about risk management as an organization, this is one of the things we took out of the page of Citadel here in Chicago, who happens to be a big hedge fund. Well, in 2008, what happened was there was a run for, kind of the bank run on the banks, right, in hedge fund world. And those who had to redeem and didn't have these lockup mechanisms, they actually went out of business and their investors were adversely impacted. Citadel shut the gates and they got through to the other side. And then they opened the gates and said, okay, if you want to get out. And people are like, no, I'm good now, right? After they made 40 or 50%. So we sort of think about it like that. But we want to put that liquidity in the hands of the investor. And that's why we've gotten out of the buy, fix, and sell and into the buy, fix, and hold. And you can determine when you want to exit the investment, because certainly you have a basis between where the unit price is trading and where you invested as an individual. And you'll pay taxes once you sell those units.
The hosts of the YQA Investor Podcast are not licensed accountants, attorneys, or financial advisors. This podcast is free entertainment and information only. It should not be considered professional or personalized financial advice. You should consult the appropriate professional for specific advice relating to your situation.